What's going on, everyone? Gilman with Wellthy Stocks, back with our daily Apple update video, ticker symbol AAPL, where we take a look at how Apple stock traded today, key levels of support and resistance that we are looking at moving into the future, and based on that, what we think Apple stock could do. So real quick, if you enjoy videos like this, don't forget to hit that like button down below, subscribe to my channel if you are new, and comment down below what your thoughts on Apple are, and I'd love to chat with you guys down there. So let me go ahead and hit record, and we will get right into the video. So small red day, as you guys know, we're down about $1.49 on the day, 1.23%. So why are we down? Same story as it's been, pretty much as the yields are going up, the tech stocks are going down. So US stocks ended down slightly on Tuesday, with investors selling tech-related growth shares after US Treasury yields a 14-month high. So yields starting to move up again and kind of, taking us down in the process. So unfortunately, that's what we're seeing. So that's what we're talking about here. Now, the good news, as this article mentioned, and that we'll see, is that there was a little bit of a recovery, so we didn't end near low of day, which is good. The Nasdaq is actually on track for its first monthly loss since November, following the recent rise in yields. So that's what we're talking about here. So tech stocks, which have a low rate environment heavily baked into their price evaluations, have been the hardest hit by the rise in yields, right? So that's why when we say rise in yields, tech stocks selling off, it's because a lot of their valuation currently is built around, some of these lower rates. So as rates go up, they're hit a little bit harder. And then when we take a look at, other kind of areas of the market, so if we go to, stocks like American Airlines, up 5%, CCL, up 4%, right? So airlines and stocks that were historically not doing well during COVID because of the fact that COVID was going on, right, are now starting to recover, a lot of those stocks to their pre-pandemic level as things start to go slowly back to normal. And as a result, tech stocks are taking a little bit of a beating. The other thing that I want to quickly talk about is Apple Pay becomes South Africa's second digital wallet. Don't think it's like crazy big news, so I'm not gonna spend too much detail on it, but that did happen, so that's great for Apple moving forward. And yeah, that's what we have. So again, a little bit of a red day, but the good news is we did get a little bit of a bounce on 119, so we kind of established that level of support, and then we kind of pushed up from there, broke 120s briefly, and then ended the day right at right below 120. So that's what we had here, you guys. Little visit down to 119, below VWAP, came above VWAP, and then we were finding good support every time we came back to this line. So that's not too bad, right? Let's take a look at the daily chart, and we'll see what we see. So you guys remember yesterday I drew out this bull pennant looking pattern, just to see if it's valid. Look, I don't know if it's valid. I drew it yesterday, and if we zoom in, we did dip below it. Our wicks did, but we actually ended right inside of it, which is super cool. It kind of validates it, but what needs to happen now is we need to really start moving up. I drew it not necessarily thinking that we are for sure going to get a breakout, right? Because the market's so weak that I'm not fully certain that we will, but it's still good to kind of catch patterns like this. And if it kind of reacts and it goes up and maybe hits the top and kind of bounces back again, maybe it's valid, and maybe we see a little bit of a breakout happening. I mean, we're due because we've been consolidating for a really, really long time. So now let's see, how it goes. RSI is not looking too bad. We're at 42. I mean, it is falling, and it is more on the oversold side than on the overbought side. Pretty darn close. But what the key here is that we are kind of pushing up. If I were to draw a line from here all the way to here, we are making kind of higher lows, which is definitely a good sign. Not making higher highs just yet, but making higher lows. So, closing within this. Now, again, this bull pennant doesn't have to be perfect. We can adjust it as needed, but really need to start pushing up for this to be valid. Now, what I want to talk about is today's candle, right? Not looking too great. Remember yesterday we made a higher high, higher low. Today we didn't do that, but we did have a nice recovery at kind of the 119 level, 118.86, and then we pushed up to close the day, not as red as we were at one point. So now let's talk about future levels of support, future levels of resistance. So the first level of resistance we have is at 120, 148. As you can see, last Thursday, last Friday, and technically even yesterday we struggled at that level, right? Thursday, Friday we struggled to go above it. Yesterday we struggled to close above it. Today we didn't even make it above. That's going to be that first test that we have, right? The second test we have is 123.69. Now this level is also pretty, hard to break into, as we could see going back to early kind of March. We've hit up against it here, March 4th, kind of went above it on March 15th, but then 17th, we were coming back down. 18th, we came back below it. And then since then, we've kind of briefly gone above it. So 123.69. Those are going to two really, really important tests that are coming up for us. 121.50, 123.69. These two levels. Once we can get above that, right, I think we can push up. Now, as you guys know, the key thing that I'm hoping we get is that 89 EMA, which currently is at 124.36. So that's a little bit away. That requires going through both of those levels. So unfortunately, not great for us, because it does require us going through two levels just to get to that point. But hopefully 124.36 is attainable, and we get up there soon. On the downside, what we have, you guys, is this 119.09 level, as we have validated today, last Friday, last Thursday, and a couple times back here in early March. That would be a good level of support. If we break below that, we got the 116.20 level as well, and not to mention the 200-day moving average coming in at 117. So hopefully, if we break 119s, 117 is what I think could be kind of the lowest it would go. But that being said, right, the market can take us wherever it wants to and doesn't need to necessarily bounce. But I would assume 117 and then 116 would be super good levels of support. But waiting for kind of a reversal to happen before I do anything if it does go down there. So again, hoping that we can push up towards 121.40s, really hoping for that 124 in the 89 EMA, you guys. Hopefully we get that this week. Remember that we only have 2 more trading days. We're off on Friday because of Good Friday. So just kind of keep that in mind. As I mentioned before, right, S&P is being a little iffy, right? Talked about 400 being a level that we have coming up, which honestly we could do in like a day if we have the momentum. But I kind of talked about how, we could see a little bit of rejection before we break through it. So 398 first level to watch out for, then 400. If we go down, we got support at 394, then 392, then 390. So keep an eye out on that, you guys. QQQs were also red on the day, so keep an eye out to see how that goes as well. And then we'll see how it goes. We got a nice bounce here today off the 89 EMA, and then on the S&P 500. Forgot to mention this, but we got a really good, nice bounce off of the 8 EMA in the past 2 days. So hopefully that continues, and hopefully we gradually start to push up from here. That's all I had for you guys today. Hope you guys enjoyed. If you did, don't forget to drop a like, subscribe to my channel, comment down below what your thoughts on Apple are, and I'd love to chat with you guys down there. Let's remember to be a bit better every single day, and until next time.